Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market technical analysis where we look at what exactly happened in the markets today, how we can plan for the future tomorrow. So this is analysis for October 29th, Friday 2021. If you're not subscribed, please subscribe and share it to your friends so that everyone benefits from it, right? So, big day, a big sell-off happened on a monthly expiry of October. A big, huge correction. We'll see what exactly happened. Probably the correction, maybe, or we never know. Let's see what happened. So, as usual, we would be looking at the pre-market analysis based on all of these parameters that you see on the left side, which is on the charts, and then we would have additional analysis on those parameters that you see on the right side. So, for wasting time, let's see. Price patterns to begin with. We have the charts here. Nifty had 354 points down, 2% almost. It lost the 20 moving average support of one of the band's median, and the previous swing low support also gone. Big white range bearish red candle is what you see here. See, look at the size of it. Right side you have Bank Nifty, same. Bank Nifty has an even bigger sell-off of 1,360. That's 3.3% on a single day, forming a wide range bearish candle, losing all the gains. This is a 1,500 up move that happened in one single day. Lost that and much more, and then now it is at the support zone. Fibonacci support. I don't know, the change in polarity where previous resistance turns at support, but causing a potential bounce is possible from here on both Nifty and the Bank Nifty. This is a gap support. This is a support zone basically. It has gone up, come back to the previous resistance zone from where it had earlier broken out. Same here. So this is support zone. Whether it will hold its support or not, never know. Right. So Bank Nifty and Nifty Intraday, if you look, it was trending down. This is what happens in Intraday. Right. Started 9:15, trending up, low, low, high, low, high. So it's trending up. Downtrend is what you can see on both. There's no doubt about that, right? Nifty had fallen off from the Bollinger Band's median and lost its support of that, and Bank Nifty has fallen off from the upper band of the Bollinger, where it was walking the bands basically. That's how done with, right? Look at the support and resistances, right? The 18,000 support is history. It also lost actually the support of it's taken the support of 17,850 after losing that briefly to 17,800. Went and touched 17,800 near to that, and then bounced up and settled at 17,850 support. This is the previous resistance zone. So that's a support first, and then below that you have 17,650, 600. That is going to be the next support, which is the Fibonacci retracement 23%. And if you lose that, then it is 17,450 levels, right? Which is the previous swing low, and after that you have another swing low, which is 7250 to 7300. So upside we have the first resistance that appears at 18,450, 350, that range, which is the previous resistance, and then after that you have 18,650, which is closer to the 18,600 rounding number, and it's all-time high news, right? So some on the Nifty side resistance and support. Right side you have the Bank Nifty, where it had fallen off 3.5%, and let's take the support of the previous swing low, which is 39,500 levels, and then bounced upside, right? It had gone, in fact, even to the 39,300 kind of level. So exactly the support it. So previous support. Now it is resistance, which is 40,000. First resistance upside 41,000. Second resistance, third is 43,000, which is where it made the all-time high previously. So what a big fall that happened. This nearly 6% of correction. This is nearly 4% more of correction that has happened, right? So that is support and resistances, and downside if you have the 38,800 so on the Bank Nifty, which is also a support, and if you lose that, then you have 38,000 303, 300 kind of levels. So all marked previous month against change, and it's just that it just lost two of the previous sessions in one day. Same with Nifty, it lost moving average support and one of the major 18,000 support and the 1850 support, but it managed to close at 870, 850 levels. That's the resistance. Look at the divergences and the momentum. Weekly divergence, we said that it is still work in progress. See, smaller the number of the bars in the divergence, more effective it is. The target is close to 15,650. So that target is near to 17,500 levels actually. So there's still some more left, but it's almost done with the target, and the weekly divergence worked perfectly. But daily on the daily time frame, the Nifty and the Bank Nifty down. Both you can see that it has lost the momentum from the bullish rounds to the sideways. Both of them has lost slightly. There's a chance it can bounce back immediately, right? So that's about momentum and divergence. And trend indications, if you see, left side Nifty, we talked about this band, and that band has given a very good down move of nearly 4% of down move after that. Now this pattern today, you can say the bend, and it's this bend which is the indication of the strength of the trend ADX, and it is turning upside, and it's fine. But as of now, DMI negative is dominating, and it is bearish in the short term trend. On the Nifty and right side, you can see that it is still bullish trend, but it has taken the strength indicator of the ADX, right? Although the DMI positive is in bullish zones, this has taken a bend, means it can fall further down. So be careful on that. VIX volatility shot up today to hit near 18 levels, right? It went much beyond 18 levels also. So 7% it settled was the big shot up of the VIX that happened. 17.5 is the implied volatility, and 44.15 is the implied volatility percentile. Higher it goes, so that of the option sellers. Operators data, if you look at, you can see that. See, keep that one thing in mind, is that tomorrow is the first day of trade after the expiry of the month lead that happened today. So this data that you see on the operators data may not be relevant, but still that's data that we have. So this is saying that 18,000 is high supports on the Nifty, and 70,500 is the next supports on. Wide difference. So it still says that it can slip up to the another 500 points. Slippage can happen. What too early to say, because trading is going to happen on this from tomorrow. And the resistance on the upside is also 18,000. So crossing the 18,000 back again is going to be a hurdle. Will come tomorrow. Now that it has slipped to 18,000, 70,800. Right. Now the resistance number 2 over the highest call ratings is very far. Put call ratio is bearish. It's not bullish anyway. It's 0.5. 0.78 for the Bank Nifty is also not that great, but short build-up has happened. It's clearly short build-up in the futures also. Bank Nifty, you can see that the support levels at 40,000 and 39,500. 40,000 is almost lost actually today. So whether it will retain 40,000 back is a question, and the resistance is seen at previous places where it had conquered 41,000, and after that it had 43,000 with the highest call ratings there. And put call ratio is also not that bullish, but better than Nifty. And the short build up again on that. Futures. Open interest try. Sectoral performance, if you see, all of the sectors perform badly. When you have a fall of such huge fall of 350 points on Nifty, how would you expect any of the sectors to perform? None of them performed. IT gave up 1.66%. It already lost the momentum in the short term sideways. Metal closed 3.4%, lost the momentum earlier itself, and then non-tradable auto, which was positive yesterday, now that also lost 1.5% and then lost the short term momentum. Pharma slipped 2.2% and then lost the momentum already. FMCG has closed 2% down. This is a mistake. FMCG closed 2% down and already lost the momentum. Reality lost 3.7% and the momentum is already closed. So as of now, none of the sectors are having any indication of the bullishness. Institutional participation data is not coming, but it must have been heavy selling by the institutions definitely. You can see that last 7-8 days continuous FII selling has been mentioned in this stock earlier discussion also, that it is a worry. That is exactly what happened today. It must be at least 3,500. Let's quickly go and check whether the data is coming or not, but it's not there. But yes, you can see that the 3,818 crores of selling happened from the institutions. Look at that, 20,429 crores of selling has happened from the FI side, which is historic, considering the fact that there is no balancing amount of buying that has happened from the domestic institutions. This has never ever happened before. This kind of selling clearly shows that the money is flowing away from the market, and we need to be really concerned about this. Going back to the um, dollar index, right side you can see that it is bearish. Dollar is weakening, which is good. Currency pair on the left side also is showing some bearishness and some tendency to fall back to the channel. Top and inside the channel, it has fallen off from this resistance and will try to shoot up above 75, but it could not sustain there. Crude oil has cooled off a little bit and then come to the 80, 82 below levels, and some kind of indecision is there. But unless and until it cools off and falls off down from this breakout neckline zone and go to 60s or 70s levels, this is not good for us numbers. Look at gold shooting up, trying to break out of the channel top and taking out next resistance immediately on top of that when the dollar is weakening. So that is good that gold is trying to break out. It is actually forming a weekly cup and handle pattern as we discussed. As of now, global markets are not showing any big moves. We have to check this pre-market before we get. This is the Dow Jones, this is the Nasdaq and S&P 500 and the UK markets and the Chinese markets. It's all flat or no major. Dow Jones is showing 266 negative, but since Nasdaq is showing positive, it's not bad. It's not 11, but again, pre-market we got to look at how the global markets have performed in order to get a cue. Also from the SCX also you can make the clue tomorrow morning. No actionables, very few stocks are in the bullish ones, but yeah, TVS Motors is having a rounding pattern. It is at a verge of a breakout, and if you see a green close above this neckline, take the trade. This positional swing trades and not in trade. The volumes are good, momentum is good, trend is good. Larsen Turbo is having good volumes, good momentum, good trend, and it is in a channel and then showing a green candle and just broken out of a rounding pattern. Right, so that is something that can be again swing and push trade. To wrap up, mild bearishness is still in the short term view. It's because of the fact that the institutional selling is huge and is a concern. Cool and weak would be also is a concern. Charts are showing bearishness overall, and it has lost the momentum and the trend on the NIFTY, slipping from the bullish one till yesterday. So this is the right. There is a weekly bearish divergence which is still not met the target of 7,500. Still can act, right? So these are three reasons why it is bearish. Why mildly bearish is because the charts in the NIFTY early support zone, which is Fibonacci from the last swing, and also a previous resistance which is turned off support, which could be a change in polarity, and it could bounce, ending the 4% of reasonable correction that happened at 6% reasonable correction that has happened on the BANKNIFTY. Now, the last two paragraphs with repetition. For the option traders, volatility, the IVP has increased. Volatility is forming a range definitely between 15 or 16 and 20. It had fallen, cooled off the previous days to 16.5. Today it shot up, bringing the market down, and it almost went to 18.5 levels. And this mean reversion nature of the volatility within this range is going to happen in the coming days. It is a new volatility regime. The premiums are increased, but the choppiness of the intraday is very scary. Today it was trending downward, but the last several days the V-shaped moves were very much confusing intraday players, buyers and sellers. So as we had mentioned several times, all-time high levels is where we are at. Even now we are at a all-time high levels. You can say as long as we are very close to 18,000. So profit booking can happen. Has already happened. We have seen that heavy selling off that is happening from the institutional. So even if you get a intraday direction, that direction may not sustain. And technical interest will help you play the Vega positive to benefit from the Vega positive moves, and having the vertical spreads instead of negative will help us limit the risk, limit the losses, right? And that's the repetition of what I say to benefit the option sellers and option traders, right? Mainly, right? And that's a wrap up. So if this has helped you frame your view and a trade plan for tomorrow, then hit the like button and then share it to your friends so that everyone benefits. Thank you so much for watching. Happy trading and have a good money.